When it comes to investing, majority of people always believe that you need to have a lot of money for you to start investing. But in Kenya, that is not the truth. The truth is that you can start investing with any amount of money that you have. Now, today I want to take you through two different ways through which you can invest in Kenya, starting with the lowest amount of money you have. Now, what we are going to talk about, I'm going to start by talking about how to invest in government bonds, or also known as the Treasury bonds. The number two, I'm going to take you through the process of investing in stocks, publicly listed company shares at the Nairobi Securities Exchange. Now, this tutorial is going to be fully audio. There is not going to be any video. There is not going to be any other thing. So please make sure you stay attentive up to the end. It is going to be very, very short. So let me start with investing in government debt security, such as the treasury bonds. In this case, we are only talking about the treasury bonds. Now, let's start by defining what a treasury bond is. A treasury bond, just from the word bond or treasury, it is something that is held or being issued by the government. Now, this is a debt instrument that is being issued by the government to its citizens in exchange of money. Yet the government is borrowing directly from its citizens, and just to show that there is already a contract between the citizen who has given his or her money to the government, the bond is issued. Now, the bond is acting as the agreement or the contract between the borrower and the lender. In this case, that person who is buying the treasury bond is the one who is lending his or her money to the government. Then the government is going to become the borrower. Now, when you go to the bank, for example, to take a loan, you are going to take a specific amount of money. Then this money is not going to be paid back the way it was taken. It is going to be paid back with interest. So the same applies to the treasury bonds. When a government borrows money from you and gives you treasury bond, the government will be paying you interest after every 6 months. In this case, the government pays you interest after every 6 months. This interest is also called the coupons. Now, let's say that you have bought treasury bond worth 100,000 Kenyan shillings. That is the face value. Then the price of this bond will always depend on the interest rate and also the time to maturity. There are also many other things that will determine the price of a bond. For example, the coupons that are going to be paid. Now, the price of the bond will be different from the face value of the bond. For example, if the face value of the bond is 100 Kenya shillings, then the price may be 103, where the 3 shillings may be acting as just a premium. Now, this is what happens if you buy a treasury bond today. This treasury bond has to have some features. These features are very, very important for you. First, you need to look at the price at which you are buying this treasury bond. There are three different prices at which you can buy a treasury bond. The first one, you are buying this treasury bond at par. At par means that the price you are paying is equal to the face value of the bond. If the face value is 100 Kenyan shillings, you are paying 100 Kenyan shillings per unit. Then the second price is buying that treasury bond at a discount. Buying a treasury bond at a discount means that you are buying it at a price that is slightly lower than the face value. If the face value is 100 Kenya shillings per unit, then you may be paying something like 95 Kenya shillings per unit. That is a discount of 5 Kenya shillings per unit. Then the last and the third and the last price is buying it at a premium. We have talked about the premium. If the face value is 100 Kenya shillings per unit, you are going to buy it at a price that is higher than that. Let's say at 103 or 104 Kenya shillings per unit. Now that is the price of a bond, the face value and the price of a bond. Then there is the coupon. Coupons are paid after every 6 months. After every 6 months, you are going to be paid a coupon. Now, if the coupon rate of a bond is, let's say, 12% per annum, and you had invested 100,000. So it means that it is 12% of the 100,000, which is 12,000 Kenya shillings per annum. Then you are going to be paid 6,000 Kenya shillings after every 6 months, because the annual coupon is going to be divided by 2 so that you can be getting biannual coupons or interest. Then there is a time to maturity, or what we refer to as the redemption value. Not the redemption value. Let's say the time to maturity. How long is it going to take you to hold this bond until you get your money back? Some of these bonds normally trade at, let's say, a period of 5 years, 10 years. Some of them go even up to 30 years. Some of them 20 years. So if you buy a bond that is having an horizon or an investment horizon of 10 years, it means that you will be receiving biannual coupon or coupons after every 6 months for the next 10 years. Then when the time that this bond was supposed to be inactive or in effect now elapses, after the period of 10 years, you will be receiving back your 100,000 Kenya shilling or whatever amount of money you had invested. Now, those are the basics, guys. About the tax, most of the treasury bonds, especially the infrastructure bonds, do not have tax. It means if the coupon rate is 12%, that is what you are going to receive. There is no tax imposed on it. That is for majority of the infrastructure bonds. But there are other types of treasury bonds that are not infrastructure bonds that normally attract withholding tax of 15%. Remember, it is 15% on the interest that is being paid to you. If you are being paid 12,000 interest per year, then it is going to be 15% of the 12,000. So you are going to get 85% of the 12,000. That is now your net income or your net return on investment after deducting the withholding tax. We have two different ways through which you can start investing in government bonds. First, you need to open what we call the CDS account. The CDS account, this is an account that is being held by the Central Bank of Kenya. You can either open it directly from the Central Bank office, or you can open it through a broker. Majority of the commercial banks are brokers to the Central Bank of Kenya. So after you have done that, you can always buy these treasury bonds every time they are floated, and you can also still buy them from the secondary market. So that said, if you buy a treasury bond that's supposed to go for 8 or for 10 years, then after 3 years you feel that you want your money back, you can still sell this treasury bond in the secondary market. Let us briefly look at the Nairobi Security Exchange publicly listed company shares. The first step, you need to open a CDSC account. And the page on which we are is the CDSC. This is the Central Depository and Settlement Corporation website. This is the body that normally holds all the CDS accounts that people open. Once you open that CDS account, that is the account that is going to hold all the shares that you are going to buy. Now, once you do that, you can either, in most cases, we normally do that through the approved Central Depository Agents or the CDAS. And when you look at this website, you can see we have a number of them. We have ABC Capital, we have Absa Bank Kenya, we have Absa Bank Financial Services, Access Bank, we have this one here. We have a very large number of approved Central Depository Agents. So once you open a CDSC account with one of the agents, you can start buying and selling the publicly listed shares. There is a number of shares you can buy from or at the NSC. For example, we have Safaricom, it is publicly listed at the NSC. Different types of banks such as Equity Bank, KCB, NCBA, Standard Chartered, a lot of them are already listed at the NSC. We also have other companies that are falling under the energy sector. We have the Total, we have the Kengen, we have a very large number of them. So once you do that, You make sure that you fully understand this company. There are two different ways through which you are going to earn when you invest in this company shares that have been listed at the NSE. The first one is through what we call the capital gain. The capital gain happens when you buy a stock. Let's say you buy a Kenyan share at a price of 10 shillings. Then after 1 month, the price goes to 12 shillings. That is around 20% or 2 shillings per share. That 2 shillings per share is your capital gain. The second way is through what we call the dividend. When majority of these companies perform very, very well, after every financial year, they will always uh, distribute some of the profits they have made to the shareholders. That is what we call the dividends. So you can actually benefit from the dividends as well as the capital gain. The stock market is quite risky and it is riskier than the bond market or the treasury bonds. This is the reason. The treasury bond, the price will always remain, not the price, but the amount of money you have invested will always remain the same until the end of or until the maturity of that particular bond. If it is 1 million Kenya shillings you have invested, it is 1 million that you will be getting back at the end of the 10-year period. While in between, if the coupon rate had been declared to be 12%, it is going to remain 12% up to the end of the 10-year period. Yes, but when you come to the stock market, you can buy a stock at the price of 10 shillings today, then after 3 months the price goes to, let's say, 7 shillings. You have lost 3 shillings per share. Some of these stocks may also be delisted or they may be suspended from the NSE. So the stock market is quite risky compared to this other one, but they have a very high potential compared to the treasury bonds.